Good afternoon. My name is Marta Chlewicka. I'm a press person in LPP company. I would like to welcome you on behalf of Mr. Przemysław Rutkiewicz, Vice President of the Board, and I would like to welcome you to the conference dedicated to the results that the LPP company has achieved during the first quarter of 2015. I would like to welcome all of you who are listening to our conference via online transmission. And now I give the floor to the President. Thank you. During today's presentation, we will tell you about the financial results for the first quarter of 2015. We will talk about the most important events in our brands, in connection with our brands, and our plans for the remaining part of 2015. Sales revenues for the first quarter were over 1 billion zloty. At the end of March, we had 1,528 stores in more than 20 countries. And the floor space also grew. And despite difficult situation on the market and smaller margins, we were working on the cost of operational activity, operational costs. We were able to decrease. We had 24 million of operational profit. This is a better situation. This is a better result than the market consensus. Now, a few words about the most important events during the first quarter. We have opened the stores in the Middle East. The first store was opened in February in the capital city of Egypt. We are cooperating here with our Egyptian franchisee. And the first store was opened under Reserved Mark brand. And then in March, we opened 2 stores in Germany. At the moment, we have 6 stores operating in this country. Then again, we opened another store in the capital city of Qatar, Doha. And on the 30th April, we opened the 3rd store in Kuwait. We have also worked on a CSR policy. This is a very important element of our strategy. These are the issues that concern our business partners and suppliers, and we will talk further about that today. You know this map. This is the map where we have more and more stores. In the first quarter, we added 12 new stores, and at the bottom, we have new country here, Egypt. And with this store opened in Africa, we have stores on 3 continents. And now SiNSAY, our brand that have been on the market for 2 years only, now we have 141 stores. 35 of them are located abroad. And now let's move to the financial results for the first quarter of this year. Sales and the most important index with regard to store, which is the like-for-like sale. And now a little comment. We provide the LFL results according to a new methodology that we have changed last year. During the first quarter, the sales dropped by 0.7%. So here, the change of currency rate does not apply. In Poland, we had LFL drop of about 4%. And why is that? First and foremost, well, we have less people, less traffic in our stores comparing to year of year. This is about a few percent less than last year. We know that Poles are not more. The number of Poles is not growing, but the number of our stores is growing. However, the e-commerce, our online sales, is growing. And here, the internet users, or those who prefer to buy online, number of those people is growing. And now, LFL's 2-digit positive result in Russia and Ukraine. We are very happy with this situation. And in addition to the old stores, so the comparable stores, we also have the new floor space, new opens. Take a look at the table. Our sales has grown, and the floor space grew mostly in the European Union. This is more than 70%. And now a graph, the growth of floor space for the first quarter. So the biggest growth is in the EU, Germany and Croatia, but also this growth is a result of our taking over the Slovak franchisee. Poland has also a very dynamic growth, and a smaller growth in Russia and Ukraine. And here I would like to stop for a moment and tell you that we decided to withhold the development in those two countries due to a very high political risk. So we told ourselves that our expansion will be withheld for some time, and in the autumn, we will review the situation again, and we will be able to tell you about our decisions. But at the moment, we are stopping here. And we have a new element here on the graph, new region, the Middle East. This is one store that we have opened in Egypt. And again, floor space growth, but by brands. Now I would like to pay your attention to SiNSAY, which has a very dynamic growth. The growth during the first quarter, 14,000 meters are the reserved stores. Of course, Germany, Croatia, and the Middle East. We also have a dynamic growth in MOHITO and a slowdown in a youngsters, teenagers brands, Cropp and House. As you know, we are entering with a package of 5 brands, but the slowdown in MOHITO is a result of closing of our decision to close some franchise stores. So now we have LFL sale, we have new floor space, and now the sales. The sales grew year by 6%, and it was due to the growth of a floor space. And the structure, well, Poland is generating the highest sale, over 65% for the first quarter. Russia and Ukraine, sales in the local currencies, this sale was higher by 40% in Russia and 16% in Ukraine. But we have a flat Ukraine and small drops in Russia, about 4%. And now the graph, the picture on the right, this is the structure by our brands. 2 years ago, we didn't have any SiNSAY, and now SiNSAY is generating 6% of the turnover, and this is the diversification of our portfolio, brands for portfolio. It's a very good situation for us because it expands our security and safety. We will be developing new brands. We will talk about it later on. We have a 6th brand on the way, and we will be opening a new store. In order to test the effectiveness of our business, we check different ratios and index to be able to compare our business with our competitors or with different periods. So sales has dropped on the left that you can see. This is the total sales of stores, also the online sales. But in the table, you can see only the store sales, which is the retail sales. And of course, we have the drop in the region of Russia and Ukraine, which is a result of the depreciation of the currencies, because in the local currencies, we had the growth 12% and 40% in Russia and 48% in Ukraine. That was in local currencies. Poland, we also have a drop here, particularly due to the fact that we are reaching smaller towns in Poland, and new shopping malls, shopping centers are being opened, and this is the situation right now. Sales in Poland is the highest in comparing to all other regions, because our brand is recognized here, the best e-commerce market. It's growing dynamically, 45% year on year. As you know, in Poland, we have 5 stores, online stores, dedicated to each brand, but we are starting an online store. We opened a German online store, and recently in Czech Republic, and soon, in the nearest future, we will open one in Slovakia. Rzeczpospolita Daily has appreciated our brand e-store as the best in fashion category. Thank you for that. And now moving on to margins. The profit margin has dropped by 2.7 percentage point. And here a small comment. Every month we report our sales and margins. If you summarize our margins, they are smaller than what is actually presented on the quarterly summary. This is a result of the fact that our policy of branding has changed in January, and we have to still work on the monthly reports, because the quarterly reporting is just more accurate. Where do we buy our goods? Most of it, 90%, is Asian countries where the currency is US dollar, and this appreciation of US dollar has influenced our margins, and this is one of the causes, contributors to the drop of our margins recently. And we also have problems with completing our sales programs, and the fact that we need to enter into new programs affects our performance here. Now let's move on to costs. Costs come mainly from our own store, and we have spent a lot of effort to decrease our cost. It is 14% year of year, and these are the smallest cost since 2010. What is the structure of our stores? Half of it are the cost of rent. We also have quite a significant cost which is connected with personnel, and the remaining cost, energy, credit cards, and amortization. We have worked a lot to decrease those costs. Each group has recorded a drop. On some markets, in the eastern markets, we had a help from weaker currencies, for example, in Russia, but most of the cost we were able to decrease due to better improved management and our negotiations with the owners of the shopping malls, and adjusting the rental cost to the current situation on the market. And the change of interchange in Poland helped us to decrease our cost as well. And the total cost, which is SG&A cost per square meter, it dropped by 12%. You often ask me what is happening in this SG&A cost. Well, we are not perceiving our cost from that perspective only. We need to report it according to the law, but internally, for the management purposes, we use other division, which are the division between the cost of stores and the headquarters. In the stores, in the cost generated by stores, these are also the cost of all the stores that function, but the upper part of it, the headquarters cost, well, buyers, designers, IT specialists, logistics and back office and e-commerce department, and the cost connected with developing a new brand. This is what constitutes this part of court. Now it's time to move on to the operational profit. It was almost 24 million. Well, it's not surprise that it was lower, but with the situation on the market that we had, it's a very good result. I will talk about that more later on. Financial activity this year, depreciation of hryvnia and appreciation of US dollar. We had minus 550 million. And the tax we pay the tax despite the fact that our result is negative, but it is a result of a methodology because we decided to pay the advances, and therefore we paid the simplified advances and we paid the tax. Our group had 37 million zloty loss, which is not a very bad result with regard to this pressure on margins that we have been observing recently. P&L, it's very important. Everyone is interested in it, but you are also interested in cash flow, and let's get into that in more detail. Well, inventories are growing with the volume growing. And of course, here, in order to evaluate the effectiveness of our business, we calculate inventories per square meters. We had 516 zloty at the end of the first quarter. So we said that each brand has 1,500 per square meter as an optimum limit with regard to inventories. Well, it's slightly above, but we still believe that this level is under control and we can keep controlling that. And we will work in the future for our inventories to return to the optimum level, which is below 1,500. A few words about our new logistics center. We have opened a new logistics center. So the first shippings are already completed. This is a very big facility. Those of you that visited Pruszcz, you saw our plot and this facility, the old facility. The new one is similar in size. It's about 4 soccer playing grounds, so 5 kilometers of different belts. So it's like a spaghetti inside. This is a very modern, very state-of-the-art center in this fashion market. Soon we will be inviting you for an Investors' Day. It will be organized in autumn this year, and then you will be able to see our new logistics center and our headquarters in Gdańsk after the general rebuilding, refurbishing. But we don't really have a specific date yet, but please book October. It should be in October. Cash flow cycle. Now, here we have the fact that we had more inventories. Well, we had longer cash flow, but it influenced the whole cash cycle. But here are the receivables and liabilities. It hasn't changed much as compared to the previous periods. We use 3 instruments letter of credits for financing. We also have prepayment and bank transfers, international bank transfers. We don't really use prepayments, but operating cash flows. In terms of capex, our capex was 104 million zloty, and despite the fact that we had a higher floor space opened, the capex was smaller. But a very important element is the financing that we receive from our developers of shopping malls. This is fit out, and because our company is growing, so we are better in negotiating. So the fit-outs will help to improve our capex, so that our capex is smaller. So this is a very important element of our strategy. We want to have them as many as possible in Poland and abroad. Inventories financing and capex financing has grown due to debt, to interest-bearing, to operating loans. But the debt ratio, net debt, as compared to EBITDA, grew from 0.5 to 0.9, but it's still a safe level. A general picture, cash flow, you can see it on the graph on the left. As we have said, operating capital, negative capex, which is also outflow of cash. Those two elements were financed by loans. In terms of credit lines, our company has got 1.4 billion zloty in credit lines, and we use that money in three ways: for loans, for paying for the purchase, for the goods, guarantees for the rents in the shopping malls, and additionally cash or a loan on the current account. We still have some money left on our credit lines, so we still have money for further development. But I would like to remind you that the first quarters are always the worst ones during the year. So the first one is always the worst, and the fourth one is always the best. And in the third, and the second and the third, we actually dedicate our works to the inventories that are actually then exchanged into cash. So in the second and third quarter, we will see some improvement in cash balance. Nothing is changing here. We have non-current assets, not really much happening because we have more stores. We have more liabilities due to short-term loans. We are very creative in terms of our brands, but the balance sheet, the balance for us is a very important part, so we are very cautious in acting here, and we want to continue our stable and safe development. And now the key corporate events, what happened to our brands. And now I will give the floor to Marta. And now I would like to go through the most important events in the first quarter. You know very well our brands in terms of numbers, but I would like to talk a little bit more in terms of their image. Well, the fact that our collections are attractive and recognized, we achieve it by cooperating with world-famous models. The first quarter was the time when Reserved brand was promoted by Brooklyn Beckham. I know which person is that on the picture. Georgia May Jagger in the middle, daughter of Mick Jagger. This model became again the face of Reserved collection. At the moment, Georgia is working on her own collection, cooperating with our designers. And on Friday, we had the pleasure to host her, to have her in our headquarters in Gdańsk. We also take care of diversity of our collections. So Reserved, our flagship brand, has introduced for the first time this year a sport accent, which is Be Active collection. And we also added to the collection 2 new lines, Concept and Modern Life. Should you like to see the collections, then welcome we would like to invite you to our showroom. This is located quite near to where we are at the moment. This is at ulica Chmielna. This is where we invite the journalists, fashion journalists, bloggers, fashion bloggers. And we had the meeting with journalists just today, but this is the place where we present our current collection, mainly for the people connected with the market, with fashion. It was already said that one of the important events is the aspect of corporate responsibility. LPP is a very cautious company that is focusing on this corporate and we are trying, one of the elements is the responsibility for the chain of deliveries. We have updated a document for our suppliers, the code of conduct. Additionally, in order to be sure that our requirements are met by the suppliers, we have added an audit department in our company, another unit that will supervise the drafting of CSR strategy and implementation of a CSR strategy. We have appointed a communication department and sustainable development department. And in Bangladesh, we have appointed a unit that will, a representative office that will additionally control the facilities and factories. LPP is also acting in favor of improvement of conditions in Bangladesh, fire and work conditions, and we are participating in Accord initiative. Now, about the plans for 2015, well, this will be presented by Przemysław again. Well, our plans for 2015. We have a table that shows you our floor space as at the end of the last year, our goal that was announced 3 months ago, and now updated development plan. At the end of this 2015 year, we are planning to have 850,000 floor space, retail floor space, and the biggest growth will be the European Union, except of Poland. But apart from that, we also think that Poland will be growing here as well. Russia and Ukraine, as we have already said, we are stopping here a little bit, no growth in those countries. And this is the difference between our goal now and the goal during the previous presentations, 3 months. And a comment about the Middle East. When 3 months ago we showed you our plans for the Middle East, we were basing on our business partner. Now we can see that the openings in the Middle East are taking more time than we have planned. So the shopping malls are opened more slowly. And so we want to share just the information that is sure, that we are sure that a shopping mall and our store is going to open. So this is the franchise in the Middle East. And now the capex for new stores will be about 410 million zloty. And here we have the fall by 11% as compared to the previous period. So we are removing Russian and Ukraine stores. Fit-outs, and a very important element that helps us to decrease capex, and we will try to get as many as possible. And at the end of the year, reserved stores should be available for the clients, for the customers in 18 countries. A little bit more about cost, COGS, and operational cost, SG&A. The first one, we will continue our work in the first quarter. So we will continue negotiating better conditions, better prices for the goods. And with regard to the new season, autumn and winter, we were able to get $3 million in discounts. It may not be a big amount, but we are really negotiating, so the negotiations are quite complex. And now we are also trying to find new countries to purchase our goods. We are observing Africa. We don't really have any specific plans in terms of this continent, but we are actually trying to get to know the continent to find out where else we can sell our goods. With regard to moving, to transferring our purchase cost to the end client, which is connected with the appreciation of US dollar, well, this is a difficult situation. We will try to proceed with that in the third and fourth quarter of this year. Operational cost. So we will continue our activities. So we will try to further decrease the cost in our stores. So like for likes are negative. So we will keep our cost low. So further negotiations with regard to rents. And in terms of headcounts on our employees, we will be updating the situation to the requirements of the stores. Well, the fact that we have opened our new logistics center will help to improve our effectiveness. Well, it may not happen in this year because the logistics center needs to needs to kick off. But in the next years, well, yes, if you ask us what's the influence of our new logistics center, well, quite a big amortization. We talked about short-term activities a few months ahead, but in the long term, we are remaining a developing company. We will be faithful to our business model, which is the organic growth, new stores, new countries. We are not planning any acquisitions, mergers or acquisitions. We are entering Europe, Germany, which is the biggest market in Europe in terms of selling clothes. Well, good markets in the Middle East, and we will be adding new brands, which is the first quarter of the next year, which will be the debut of our 6th brand. It's all for now. We have actually ended this part of our meeting. Thank you for your attention, and now we are moving on to the Q&A session. And I would like to welcome all questions. Excuse me, I forgot to say that we have also online users, so we have to use the microphone. My colleague will approach you with the microphone, so please introduce yourself and ask the question. I would like to ask about the plans in terms of this year. This 12% that we saw during the first year, the fall, can we expect a similar value for the whole year? Well, we are managing our cost quite heavily. We have announced 3 months ago that we want to maintain our cost 10% lower per square meter as compared to the previous year. And we upstay this. So this is our goal for this year. And the second question, what kind of like-for-likes you ordered for autumn and winter? What were the assumptions in terms of volumes? Well, our assumptions are usually for positive likes in terms of our biggest market, Poland, depending on the brand, 2 to 5% growth in like-for-likes. And yes, we are talking about autumn and winter of 2015, but for the first time we have changed it a little bit, and for the Russian market we have planned negative likes. But at the moment, Russia demonstrates a very good sales, and like-for-likes are quite positive, so Russia will surely need more goods. And now I would like to ask for the value of the recommended, the amount of the recommended dividend. In terms of dividend, unfortunately, I cannot answer this question because we still don't know this amount. Our board is working on that. Well, I can say that this dividend will certainly happen, but you need to wait a week or 2 weeks for an announcement concerning the amount of the dividend. Michał Kuzwiński, JP Morgan. 2 questions concerning the tax rate. So, simplified advances. You paid for 2013. This year you paid for 2013. Can we expect any settlement in the future quarters or at the end of the year? And the second question concerns CAPEX. So the higher fit-out in these negotiations, cash negotiations, is it included in the CAPEX for this year? And how much can that decrease the CAPEX per square meter of a new store? So the first question, so how is the tax issue? These are the yearly settlements. At the end of the year, we have too much paid or not enough paid, and this is how we settle it. As regards to the second question, it's very hard for me to say because it depends on the location or the shopping mall, and the whole fit-out amount for this year, we think it will be over 120 million zloty. Thank you. So this tax calculation settlement will be in the 3rd quarter or at the end of the year, right? Well, in terms of the tax for this year, you can expect the settlement, the calculation next year. So the tax that we talked about for the 1st quarter, which was paid through simplified advances based on the assumptions from 2013, well, we paid throughout the whole 2015 year, and by the end of the year, we calculate the whole tax when we know the whole year. So we need to calculate it a year minus a year. Right, yes. Małgorzata Kolopaka, Investment Banking. 2 questions. Now, orders for autumn-winter season. The orders that the company made take into account the fact that Russia will not have new openings this year. Yes, in terms of winter and autumn and winter, we took that into account, but the orders are placed consecutively, so we needed to order our goods that will be, we have now ordering the goods for October and November, but the previous ones were not really changed. And now what is the growth of floor space in 2016, and how does it take into account openings and no openings in Russia? Now we are not really talking about Russia. We focus on the general number of square meters that we would like to open, and in terms of the future year, this is the 100,000 and 400,000 square meters. Jakub Montka. And now a comment. Can we hear any comment about the results of stores in Germany according to the budget? In terms of German stores, well, we need more time to analyze the situation and summarize the situation. We've been there just for a few months. We have 6 stores, and by the end of the year, we will open 6 new. So we will have 12 of them. We are not really well-known company, so we are investing to become more recognizable. And I would like to say that some stores, the stores that we have there, are below our expectations, a little bit below expectations in terms of sales, but they fit into our plan for this year. Michał Wotyra, UBS. I would like to dig more into sales in Poland. You have mentioned that we had a little bit of cannibalization, a weaker schedule, and now this traffic, does it apply generally to all shopping malls, or maybe that applies just to your stores, especially reserved, or maybe the collection is not really good enough? Well, I will start with the collection. We have 5 brands in our portfolio, and we can always compare it between themselves, because one may have a worse time and the rest of them are working better. Then we can say that one of the brands had not really good collection, but because our brands are performing quite good, then it's not a problem with the collection. Now we are observing 3 elements: traffic, how many clients visit our stores, how many goods they buy, and what is the price of an item. So 2 end elements, so effectiveness of sales, so how many goods the client buys. So this is the same level. The level here is the same, not really changed. And the only thing that has changed in Poland is the smaller traffic, and it is, in our opinion, it is connected with the fact that we have many units, many stores in Poland. SiNSAY, our youngest brand, well, it performed quite well in the first quarter. So we can see that there is a place for further development for new, smaller brands. When we observe bigger brands, Reserved or Cropp, which are present in many places, well, the space for further development is shrinking in Poland. Joanna Borkowska, Pioneer. I would like to ask about the gross profit margin and the policy concerning the transfer prices. The April data, do they show the progress? And for how long? My question is, for how long we have to wait for the margin to differ? The monthly margin that you provide is different from the quarterly. So the monthly reports concerning sales and margin, these reports are general reports, forecast reports. So this information is quite quick, and we base on the forecast. And once a quarter, we provide you with the real margin result. After the change in the transfer prices, so we wanted to be more cautious. We didn't want to provide the market with higher margins, so we were quite conservative. So the margins were really lower in the monthly reports than in the quarterly report. I think we still need one more quarter to actually calculate our margins based on the new policy methodology. Sobiesław Kozłowski. My question concerns the negative like-for-likes in Poland and positive performance of the online stores. Do you plan to focus more on internet, online sales? Well, it's very hard to focus more on internet. We do everything for our online stores to be visible. Of course, we advertise on the internet. We do a lot of promotions. Our internal Polish market, we don't really open many new stores. We talk here about the number of stores because the growth in floor space is quite often connected with the growth of space in the old centers. Because when we are in the old center and then our contract is coming to an end, rental contract is coming to an end, well, we try to negotiate a new contract with a bigger space. Well, in terms of new shopping malls, less of them are built, constructed at the moment. We are entering new towns, smaller towns. But from our point of view, it wouldn't be reasonable to reject the possibility, opportunity to build our store in new shopping malls. We know that the customers like to change their destinations, shopping destinations. They like to visit new places. So therefore, we always like to open our stores in new destinations. Because we asked about e-commerce, one of the people that is observing us online asks, what is the performance online, performance in terms, what is the target performance in online terms? We don't really have an online target. E-commerce is more or less 2% in total sales. But observing Western Europe or the US, the share of the e-commerce can reach as far as much as 15–20%. So there is still a lot of space in Poland for further growth here. So we will be developing this channel. How it works, how it develops, well, that depends on the customer. We are open, completely open to this new distribution channel. Are there any further questions? If not, well, I would like to thank you for coming and for your attention. I would like to also thank all the online viewers. This is a new form of meeting, and we would like to continue it in the future meetings. And now I would like to invite you for tea and coffee to our foyer. Thank you.